have the daily price chart for Chewy Incorporated, stock ticker CHWY. So as we can see here, there was a bit of a decline into the end of last week. We did see some moderate upside price movement here, but for the most part, we are retesting some very critical support levels. So in this video, we will sort of identify some of those levels and try to figure out some prudent trading strategies going forward. So currently, we can see that the stock has been on a bit of a roller coaster ride. After this initial surge higher, we did see some fairly significant declines back into key Fibonacci levels prior to a bit of stabilization, and then a bounce, and then a retracement back into those exact same retracement levels. So we do have to sort of define first how we arrived at these price movements. So to begin with, we have to go back to the April 25th trading session, where the stock was trading at lows of 1469. Here we can see then that the stock really took off like a rocket and more than doubled in a very short period of time. During the June 27 trading session, we actually reached highs of $39.10, which is a very significant price move in a very short period of time. And if you look at this daily candle that was created during this price spike here, you can see that it's a very strange trading candle. This candle does not look like any other candle on this price chart, and there's a reason for that. I mean, this is not normal trading activity. You're seeing a very significant difference between the highs and the lows, but not much difference between the open and the close of the period of the trading day. So what this tells you is that this was a very volatile trading day, where most of the spike occurred in the upward direction, but then almost all of that gain was given back almost immediately. So if we're looking at these at the distance between these two price moves here, we can really sort of define it like this. So this white line here would be roughly the distance between the highs and the lows here. If we're looking at the stock chart from that perspective, we can see that the stock very quickly fell through both the 23.6% Fibonacci retracement and the 38.2% Fibonacci retracement. This happened almost instantly. Like, this was like less than a 2-hour period. I mean, it was very, very fast. And it's not normal to see something like that. The price declines continued from there. There wasn't much support in this region to hold prices above the 50% retracement, which came in just above 2680. The next step down from here came in at the 61.8% Fibonacci retracement, which is found just above 2390. As is generally the case, the 618 retracement is the most important Fibonacci retracement. This is the figure that the Fibonacci sequence is essentially based on. So it's not surprising to see a bit more support come into the picture at that point. And then here we can see that there was a bit of a bit of sideways consolidation, a bit of stabilization here, which did provide a suitable entry point for anybody that was interested in going long the stock here. Ultimately, this did result in price highs above $28 per share. But then for the most part, we really did start to see some significant sell-offs in the market. And inevitably, this did put some pressure on the downside for the stock. What's important to note here, is the fact that, these declines really didn't occur until this would be the July 16 trading session. So, most of the sell-off in the market, we can kind of zoom in here a bit. Most of the sell-off in the market started to occur during the July 11 trading session. So as we can see here, there was almost a full week of gains, even though the rest of the market was still declining at that point. So this stock was actually doing a very good job as far as standing up in the face of massive selling pressure that was seen, throughout the benchmark indexes, S&P 500, NASDAQ, Dow. The Mag 7 stocks were trading under a significant amount of selling pressure. So overall, this stock did hold up very well. We were actually seeing gains during most of this first week here. Inevitably, though, we did start to see some declines, and that probably has more to do with generalized sentiment in the market. Just the fact that it is a summer trading period and there is a bit more uncertainty when you have stocks like Microsoft and Apple and Nvidia all falling to significant new lows. So, we have seen some declines here, but, these have not been significant in comparison to what some of these other stocks have faced. For example, if you look at my recent video on Meta Platforms, you'll see a stock that has really fallen through the floor and really given up a lot of market cap in a very short period of time. That same type of activity has not occurred in this stock in Chewy. So overall, the stock has held up very well in the face of these broader market declines. Currently, it is interesting to see that we did manage to bounce once again off of this same level, the 61.8% Fibonacci retracement of this prior trending move. This does come in right around the $24 area. Specifically, on this chart we have it measured at 2390, 2391. So there is some support that continues to occur here, but at this stage, it does look like we would need to see some gains probably in the rest of the market in order to continue supporting prices, because we do have some support here, both on a Fibonacci basis and on the historical basis, as well as the rising 50 day exponential moving average is also now coming into contact with this area. As you can see here, this orange line here is sort of rising into the price action at this point. And this is significant because it is the 50-day moving average, which is a very commonly watched exponential moving average. So we do have some support here, but it is starting to look like some broader sell-offs in the market could force a break of this level, and that would do some damage to this chart if that were to occur. We could probably give up the $20 mark if we did start to see some declines past this point. So it does look like at this point, we're going to need to see some broader bullish activity within the market in order to continue holding up this stock. I mean, so far it has done a very good job, but there's only so much pressure that one stock can take, especially when you're dealing with a stock like Chewy, which does not have a huge market cap. So these are significant levels to watch here. If we do see a break of 2390, that could signal a break back below the $20 mark. So here's the current market update for Chewy Incorporated, stock ticker CHWY. Characterized by superior risk to reward metrics that target massive market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.